Ron. Give me 1 second. Hey everyone, welcome. We're so glad to have you here. And I see we have Mr. Vinnie Fisher already joining us. Awesome. Hey Vinnie.
Hello.
How are you today?
I'm doing, oh, there's my little alarm for you. Sorry about that. I'm doing great.
No,
Thank you.
Good. We'll wait for Mr. Roland to get on here and then we'll get started. This is our elite only call with our epic elites, Vinnie, that get to speak to you today. So we're super excited to have this for everyone. Let's see here. Hi, everyone. All right, it is Tuesday, June 2nd. Someone tell me something good in the chat. I want to hear some good things that are happening in your deal world. Something that is good. I know, Jill, you've been doing some phone calls with team members. Oh, Jill, you got a lead. Yay. All right. What else is going on, guys? Oh, Dave says, thanks for the books, Vinnie. Look at that. Yay.
You're welcome.
Awesome. All right. A book to call. What else? Who else is doing some stuff? I want to see some things that are happening. Let's see here. That's awesome. I'm glad to see you doing some leads. I've noticed a couple of people are doing calls with each other, doing role play calls. That's fantastic. Glad to see that those things are happening. I've been seeing outreaches going on, people posting that they're getting deals or getting phone calls set up. So that is great. Ron closed an advertising deal with another Epic. Yay, that's exciting. Did it with another Epic member. Yay. Good job, Ron. Daryl had a previous deal come back and revisit the deal. You know what? That's fantastic. That happens a lot. The deals may circle around. So I think Adam Lyons mentioned that when he talked about his game store, that it circled back about 3 months later. So that happens all the time. Glad to see that happens. Hey, Erwin. Wayne got into a call to buy a Facebook group, but I'm getting the financials. Okay, for the whole company. That doesn't suck, right, Rain? That's fantastic. Great job. Erwin, finally set up your SPV. Jill, working on a deal in another deal. It's a referral to what's a finder's fee. That'll happen, Jill. That'll happen. So I would just keep working on that. Jack got an intro call with another member to discuss synergies. There's a start. That's fantastic. The baby steps still get you to the same place. So that's awesome. Gia, networking with others in the group. That is fantastic. And I'm so glad to see that that is happening. So I've been watching the Facebook group. You guys are so incredible, jumping in, working with each other, sharing ideas with each other, sharing slides. I saw someone the other day posted their notes that they took from the calls. I mean, guys, this group is amazing, and how you guys are sharing and networking. And then obviously we already have the Mighty Networks that just jumped up this on Sunday. I finally got that built, and I apologize for the delay. It took me a little bit, but I got that built for you guys. And within 24 hours, 255 people had already built their profiles in Mighty Networks. That tells me that you guys are action takers, that you are out there. You're not just sitting there in a Facebook group just watching the fun little emojis that we're posting. Like, you're out there doing the deals. So super excited to see this group being so active. All right, is Roland on here?
He is.
Hi, Roland. Sorry I didn't see you. I just became Chatty Cathy. Sorry about that.
That's okay. That's okay. I think you're doing that control thing where I don't get to be a host, but then you changed it, so now I am. Okay, cool. Okay. Nice. I like that.
You know how I like control. Sorry.
I do. Hey, Vinnie, how are you doing this morning?
Hey, brother. How you doing?
Good. Or I guess it's afternoon for you there in Cleveland, right?
Just crossed over. Yeah.
Nice. Well, hello, everybody. Welcome. This is your Deal Team 6 call with your finance and accounting partner, who is Vinnie Fisher, who's got Fully Accountable. For those of you who don't remember, we did a call before, but we have some new people, about 250 of them. So that's kind of cool too. Vinnie, you want to give just a quick background about yourself? I know some of the people here know you, but we have some new people as well, and then we'll hop into the finance and accounting stuff.
Yeah, that sounds great, Roland. Thanks. By the way, I think everyone should know that he actually likes to be handled by Deanna and having her do things. So even though he's acting like this control thing, that's hidden behind the scenes. He's like thankful that she's more in charge. So
I am always grateful for that. Absolutely.
Like throw out a little secret there in case anyone thought otherwise. So my name is Vinnie Fisher. Some of you know me. I see some faces on here I know. I want to start out by letting you know that I actually am a businessman. I'm actually a trained corporate attorney who has a tax specialty. I've had a few good 8-figure companies. I've had a couple good runs. I built Fully Accountable during one of my large health companies where I didn't know I was missing real financial fluency in my own business. And what I started to realize was that I lacked enough acumen to be able to effectively build that part of our business. I had it all wrong. I thought I'd just hire a CFO and that magically would all get handled. And I realized that I was missing working closer into this language that really runs a business, and it's this language of finance. So we birthed Fully Accountable to the world at Roland's event, Traffic and Conversion, in February of 15, and which is a badass event. If you don't go there, you need to go there, not just be part of this. You will love that in December, and I will see you there, and you can give me a hug. I won't do the social distancing if you want a hug, and just don't cough on me. But what I noticed was something that I wanted to first just impress upon your heart for today as we get into the training. I think that you need to take a litmus test of you as a business owner and recognize where you are in that journey. And if you're someone who lacks some of that acumen, well, then we need to get you the mindset that goes along with that acumen. And this was like my books, if you ever read them, they're almost written for me, okay? And if there's a chapter of this book, if you have it, that I would read over and over, I called the book after the first chapter, Your Mindset. Like if you need to wrap your mind around the idea of being the business person. Not just resonate with you as a good salesperson or you as a good marketer, which is where I would resonate always, every day when I wake up. And I have to battle and think about this ecosystem of a business. Well, when I think about deal flow and acquisitions, I think that way. I say, wow, am I actually just acting like I'll just use bigger words. Am I acting like someone who's looking at opportunities and maybe being opportunistic, but not thinking about an ecosystem? One of those is an indicator of my lack of business acumen. Other ones are those, which, by the way, let me do a quick shout out. All of you guys, I can't keep up with you. This group has got a zillion posts, a zillion good questions that I wouldn't even think about asking sometimes. So great job, all of you. This group is powerful. And the only shame I would say is if you're not asking this group for help, then you're caught in this like shame leaf or something. Get rid of that. This group really wants to help each other. So Roland, Deanna, like whatever it is you're doing, keep doing more of it because this group is super active. But what I've noticed when I see your participation is some things that look like lack of acumen. I would wake up every day wanting to improve some of that. And I would say that if that kicks on in your head, it did for me. And that's what led to us having this large company that is the largest in the e-commerce space that provides fractional CFO and e-commerce accounting to the digital world. And so when I look at deal flow, I'm thankful to have that team right at my hip. And I'm thankful that somebody produces some information for me. But it starts really with me on the deal flow, not them. I should be in there messing around and looking at things and tinkering and guessing. And quite honestly, I learned this from Roland. When I don't know an answer, I just ask a question. You ever watch Roland? First off, he's the smartest guy on here, but forgetting that part, if he just asks really good questions, and most of them are disguising him just wanting to know information. So that's where I wanted to throw out and start there. Roland, back to you, buddy.
Well, I appreciate that, Vinnie. It's awesome to have you here. So the goal of this is just to have Vinnie, with all of his expertise, be able to help you guys answer questions. I think we usually like to start these out with just kind of an update. So Vinnie, I know lots of stuff going on and you're keeping track of all the PPP stuff and the SBA stuff, which only applies to about 80% of the people on here because we've got about 20% that aren't here. But could you give just a short update on that, a short update on what you're doing for acquisitions, and then maybe a quick explanation of how I managed to finagle equity in your company without having to pay anything for it. And then that will help all of these people to understand some of the stuff we do.
All right. Whatever part of that list I forget, you let me know. But let me start with what's going on, the basic block and tackling of the government stimulus stuff. The 8-week plan of payback looks like it really is going to get extended. There might be a 12-week program on payroll payback. That's gaining momentum. And I think it's very basic and possibly even, dare say the word when it comes to government, logical as to why they're doing that.
Why is it important to business owners, just so for people that don't know exactly why that would be important?
Yeah, so if you got PPP, or by the way, it's still open. You can still apply if you haven't received it. There's over 67 billion still sitting there, including the carve out that was. So if you have not applied as a business owner for your payroll protection, even as a sole proprietor, you have the right to apply for that. The calculation, quite straightforward. It's 2.5 times the qualified amount you can apply for. The whole intent is to protect jobs, including yours. And so that qualifying number that you get from a bank, then ultimately, after 8 weeks from the time you receive the money, could actually completely convert from a loan from the government to full forgiveness grant if you just jump through the hoops, which actually aren't as burdensome of hoops that colleagues in our space likes to complicate, but there are dots to do and T's to cross to do it right. And so all of our clients, of course, are how we're walking them through that. And your bank, whatever got you the loan is what's going to get you the forgiveness. So just remember to stay there. But if you didn't get the loan yet, this party hasn't ended. You can go apply for it. Okay, I just want to throw that out there. I don't want to spend a lot of time on how to apply for it, but wherever you bank, the on-road or the influx of massive applications is done. I had a friend yesterday who applied yesterday and got his number at night. It's that the backlog is pretty much gone. And so in that category, we're now moving into the grant forgiveness phase of that. And there's negotiation going on in Congress with respect to extending the payroll time so that this isn't a disguised loan by accident, that it truly turns into a grant. Now, I've been a businessman long enough. Usually the government bait and switches us small business owners. In this particular instance, I think they're trying to truly make this a grant. So try to not buy too much into the drama that they're not trying that. I recognize all the political interests and whatever color you seem to resonate with, whatever. I think they're truly trying to make this a benefit. The bigger you are, the less of a benefit it is going to be for you. It's just kind of a public policy meets smell test. But the smaller you are, you're probably going to have less complexity. So there you go. Is that enough on that subject, Roland?
Well, the thing I was after was the cool thing about the extension is, like, for us, we got about a $1.1 million PPP for one of our companies. And that company, because we've got a few very highly paid people who wouldn't, who run out, because at 100K, you kind of run out of the applicability of that. So we were going to have, basically about 850,000 or 870,000 of money that would be forgivable under the current period, because we couldn't spend it on qualified things fast enough. So that extension that they're in the process of putting through right now will allow us to have 100% forgivability on that loan. So the important thing to you guys for an acquisition or for a company you've got is that that extension will be much more helpful in having you not have to pay that money back. Vinnie, also there is,
by the way, real quick, I want to throw that out there. I agree with it. And there are also ways, if they don't extend it, that you could look at additional compensation to staff that are under $100,000 as a way to, we did something here at Fully Accountable, when you got to deal with almost $500,000 and you're short on some of it, we decided to front load some bonuses. We decided to look at our comp in a 2020 year and make some decisions. Like, you can get creative with that. We're also sitting a little still and see if the 12 weeks comes through. Like, we're kind of doing all of that. I was going to switch gears and talk about, buying a business with something buried in the CARES Act that most people aren't paying attention to, but I'll let you ask your question first.
Yeah, I don't think people really care about that, Vinny. If that's like a creative way to buy, that's not something that's really applicable to this crowd. So I'd appreciate if you just keep that stuff to yourself and stop trying to force it on us.
Under 7A of the SBA Act, it's just the code section. What was buried in the CARES Act were two things. For personal consumers, the ability to defer mortgages, both personally and commercially, very confusing language buried in there, but it's real. Also in that section of the code was a automatic forgiveness of the first 6 months of an SBA loan, either already active or closed by September 27th of this year. They will pay your first 6 months at the greater of $5,000 a month or $30,000. And so if you look at a transaction and you like it, don't move fast just to save $30,000. But if you like it and you can look at some conventional way to use an SBA loan, you're going to get $30,000 right off the top. That's happening. And it was intended to stimulate people buying businesses that might otherwise close. Like, there's a real strategy to that. It's an economic strategy, but I already know of multiple people who are doing that with SBA lenders. Now, I recognize that we're more like, don't put any money down. Let's make creative deals. But that, under the category of maybe you do need to put some money down, that's a really interesting way to get $30,000 of that acquisition built into the deal.
Yeah, I love that. That's really cool. And are you doing anything? Are you? I know we were looking for you, and your company is actually the thing that we talked about in Deer Valley with respect to acquisitions is one of the examples now in the program on how to find companies. Have you found anything that you're working on buying right now?
I'm under 2 NDAs. When all this happened, some of my thought processes of expanding out just Fully Accountable, that's true still, changed a little bit or expanded. And I started thinking about an ecosystem. For me, this is why I'm thinking this way. I just want to think this backstory is important. We had this line in the sand that was drawn. And depending on where you were on that line of the sand, you were either closed or you're still open. And if that line in the sand was like the governor of Ohio saying the virus was on the internet, I would have been on the wrong side of that line of the sand. The fact that that line was more local in nature, imagine if it was the opposite. The local people would be like, thank goodness I'm not one of those internet people. I get to sell locally, right? So the tragedy that happened this time, what put you on the wrong side of that line, they didn't do anything wrong. Just like what put us on the other side of that line, we didn't do anything right. It's rather arrogant for me to think about that. But I took a step back and said, wait a minute, what about successful businesses that are ecosystem businesses that actually own parts of their, John Paul Getty thought like this, right? He thought about his entire business line. And, he was a guy that originally produced petroleum and then started getting into other supply cycles of his business model. I started thinking about that as our company. And like Alibaba is a good digital example of where they own things that fit within their environment. So I'm under a couple NDAs right now where I'm looking to buy a virtualized call center because it fits within our space. And I went through that same analysis that Roland would give you an example of, that he walked me through inside of Fully Accountable, is to like think bigger about what to acquire. I'm doing that both internally and Fully Accountable. We bought a team for them. Their software was awful, but we bought them and kind of retired their software and having them work on ours. So we did that, but that's not going to get announced. We just bought the team, right? So those don't get talked about very much. That was a Google play, but we needed them more than we needed their version of a software that we were never going to use. So we did that inside of Fully Accountable. But then in that process, we started thinking about, wait a minute, why wouldn't we own our external sales team with tier 1 support? Why wouldn't we consider looking at, and we went through our top 5 vendor list and said, if we're likely to be able to promote those clients, why wouldn't we take the risk at maybe owning those other promotional services. So we've expanded beyond just building out the ecosystem of Fully to the ecosystem of our client journey environment. Now, Roland asked something, how did that get him on the team? That analysis of having us think bigger and what to grow the team and what to do with it is what got him on the team. All the rest of it is just fun. But that, when I went back and told our executive team that, they're like, that makes total sense. Where did that come from? I go, where do you think? The genius. He's like, here's what you should do. And and I said, I just said, Roland, what would you think about being an advisor in our company? But more than that, actually be in this with us. And he's like, I love it. I went back to the team. I try to run our companies so that our executive team has a say in this. And the cool thing was they were immediately all in. I had them at hello on that. And so that was huge. But I've got two things going on, Roland. I'm thinking about what I would add to Fully Accountable, like that consultancy talk and things we're having. But I also started thinking about the ecosystem that sits around it. So I started thinking about both the left and the right hand. Does that help on that answer?
Yeah, I totally. And just in terms of as someone who is working on well, I guess a couple of things. First, how did you find the deals that you're working on right now?
Knocking on the door. So, I actually read, and I can't recall if it was you or one of our friends that turned me on to a family office that wrote this great article. And here was the premise of the article, that 85% of the most successful acquisitions are proactive, not reactive acquisitions. And so the point of that article and this team was the things that are for sale that everyone can look at are 16% likely to be successful. The ones that you have to proactively look inside a space, knock on the door, ask the questions, all these great emails that y'all have been sharing and writing, those are 85% more likely to produce a better acquisition. And so I'm there. I actually did something simple. I took a basic hack of Roland's thing, and I just took the SEO keyword terms that I thought made sense. And I looked at the top 20 ranking SEO companies that rank for those basic terms. And I just made a list. And I just started, for me, I wrote a little bit different letter. I said, hey, I'd love to connect. This is an industry I would love to be in someday. I'm actually more intrigued what you think about your company and what your exit plan would be someday. Would you love to talk about that?
Yeah. And then did you do that just with the Googles, or did you use a keyword tool like SEMrush or something like that?
Well, I got such a good response. I just started there. And so one of the things I recognize is the size of our organization. I told our team the other day, because I can actually make this investment right now, I might get a deal person on my hip who's going to help me flow this, because I'm a little too busy with everything. We have 4 operating companies. That means I have 4 COOs. So I'm a little bit inundated. And so I'm not getting enough time spent on that. So the answer is I would love to have done more of that. I just didn't. I just started there. And out of those 22 real things started. I should keep going, but I'm just being real with you.
Yeah, no, I appreciate that. And so when you found them, what did you do next exactly? So you found the people that ranked for what you wanted to rank for, and then what happened?
One of them wasn't even on that list, by the way. That led to a conversation about a mutual friend, which
okay.
Here have one. So one isn't even in that 20. It's like, hey, did you think about calling so-and-so? I'm like, oh my gosh, I never thought about talking to him. So I reached out to him, and this other one's a lady. And I just said, hey, here's what I want to do. Here's the sister company. By the way, the reason I like that option was I have sister companies that would immediately be clients of it. And then I would be able to refer more work into it. And so I just like that as a category for me, that ecosystem. And so I just made a call. I just wanted to get on the phone, have a conversation with them. I promised it would only be 10 or 15 minutes. Each of them were half an hour plus. And we just had a first conversation. And then I said, hey, would you be interested in taking a next step? And, I think as direct response marketer, I learned to always ask for the next step. I mean, I may not be good as Patch Baker asking, but I'm like, I at least ask. I'm not like ferocious like that guy. I can learn more from him, but I at least ask to take the next step.
I love it. And Patch, by the way, is coming on. Is it tomorrow, Patch and D, to share his, he's done a whole bunch of deals. He's going to share that with everybody.
So the one thing
Thursday, he's doing it Thursdays.
One thing one of the reasons that I'm focusing on an ecosystem is I lived through a journey in my life where I owned a whole bunch of different types of businesses. And at that phase of my career, I was involved with some version of operating pieces of those. And in that version, it didn't work very well because we were renting me out too much. So now in this version of wanting to build out my 9-figure ecosystem, I wanted to play nice together. That will have less drain on me. But I've also learned that if you're going to have a kind of what I consider going concern, I was going to say real business, but I think you can have a very real business, be a lot smaller, but a going concern in the 7-figure category. The one thing I've learned is I can't rent me out to disguise running those. I've had to learn to have operators of those. And then my job is spent with our marketing team because I just love marketing. I love angles and hooks, but I spend a lot of my time being available to our COOs to coach them. And then I'm always deal flowing, right? I spend the rest of my time looking. I just can't help but look.
Yeah, I love it. Okay, great. Well, all right, everybody, let's get some questions for Vinnie. What questions do you have about accounting? He's also a recovering attorney, so you can get free legal advice from him that you can't rely on, just like me. And anything else about funding, financing, accounting, any of that kind of stuff, deal analysis. This is a great place to ask. So if you got them, let's see them. Questions.
And then along the way, Roland, somewhere before I promised to post this, Deanna called me out hard on creating something. So I'm having a top 10 things that me as a non-accountant who now has a fancy big fractional accounting company, what would I do when I look at deals and what are my top 10 lists? So along the way here, we'll talk about those items, but I'm happy to address the feed as they're coming in too.
Okay, so first they want to know how you select your COOs.
Read chapter 2. You want to know exactly how I do it? Literally read chapter 2. It's all about team.
What's the summary?
So the team here. So I believe in 2 theories I've learned for myself. If you want something that's a going concern, you got to grow beyond your shadow. But more importantly, their heartbeat has to line up with yours. So I can train them how to actually do project management work because the COO is just the project manager of project managers. And so I look for a significant investment that we relationally connect in my core values. The core values inside of our companies, the one that I run, fully accountable, that's me. You want to get to know me without getting to know me? Go to our page, look at those core values and look at those sub-bullets. That's me. It's not everyone else. And that we have a scorecard that everyone's got to fit in there. I hear compliments all the time. Oh my gosh, your team's great. It's like talking to you. Duh. Because it is like talking to me. Because I fight that part a lot. So I need 3 things in a COO, Rowan. I need someone who wakes up with a desire to make what's in front of them better, not go make something new.
Awesome. I love it.
I also believe in that cultural fit. If you don't have a heart connection, you're going to have a heart attack. And 3, I believe that person has to wake up with a mindset to grow that company and have ownership, whether it comes in the form of compensation or equity at a level that they care about it enough, maybe not as much as you, but care about it enough. And so how do I look for them? I run a funnel. I actually put up an ad. And in the process, I do things like put up posts on Facebook. I tell people exactly what we're looking for. Like one of our members in this group hit me on a PM and said, hey, do you know someone who provides accounting inside of this particular niche? I said, did you ask the group? He said, yeah, I did, but no one came back. I said, well, then take that to a public post. He's like, oh, I never thought of that. Good idea. Like let your network give you some feedback. But I also then accept ongoing engagements. Right now, you look at whatever number you want, but we know more than 25 million people are on the bench. And if we take 15 of them off and just say we're going to matriculate back in the market, there are managers and there are good, what I would consider baby potential executives who have been removed because of cost-cutting measures. So the only reason you don't have a COO is because you're not looking.
Okay. And Dana wanted to know, is fully accountable available for them to place on their team for due diligence?
Yeah, I mean, so yeah, the answer is yes. I made that deal for Roland so that we're available. And so the answer is yes. We, as
you want to talk about that just so everybody understands what that is? What are they able to get that FA is offering, and then on what they get for free and what then they would retain you for?
Yeah. So your first thing free that you get as part of this group, we have ongoing training stuff where we will do the financial fluency of training you on how to actually read financials. And we're putting together that first training that should go live here in, I believe, July for you guys. And here's take those 10 things I'm talking about, kind of walk you through bullet points. Here's what I would do. That's to train you. Secondly, we have an hour call with one of our fractional CFOs to give you some advice based on where you're at. And then if we're a right fit for you and you want us to be your deal flow advisor on the category of accountancy, then you can engage us.
And that includes due diligence, I'm assuming, correct?
Absolutely.
Cool. All right. Erwin wants to know if you would offer equity to your COO.
Every one of mine do have equity.
Okay. How do you work that? What's the structure of that generally?
I used to, in the beginning, do awful bro deals. So I'm so thankful in my faith. The Lord has given me a giver's heart. I am a generous person. I'm very thankful for that. I have a gift of hospitality. These are all things I'm super grateful for. But I misread, in my lack of business acumen, the value equation of a partner or a team member. And so Roland, a number of years ago, helped me with this. And I think I've told this illustration to people. The rock, and think of a teeter-totter or a seesaw, or things you used to play on the playground. You've got the rock or the fulcrum in the middle, and you got the board. A partner provides the rock, strategy, something you can build a board upon. And the board just helps somebody go faster. Those are both partnership activities. If all I have to do is pay someone to stand on the board, that's an employment activity. Now, usually most COOs fall into an employment activity. So when you look at the structure of how to put them into equity, you want them to act like an entrepreneur, recognizing you're trading, that they're probably not going to be a significant partner when it comes to strategy or leverage. So those deals always look sub 10%. Everyone has a different play and flavor on that. We just brought in a COO of one of our health companies that's already doing $30 million. They get a 1% revenue share. They actually don't own any of the equity. Now, what we did for them so that they're excited is that we have that, if we decide to sell, that interest converts. And so they're like, yeah, great, money now, money later. But it depends on the size and the going concern. The smaller, if I've got to woo a COO away, I might tend to give them like 5 or even closer towards maybe some plan up towards 10%. But I can't think of a scenario where one of my operators would get anything that uber rich above that.
What is did I lost it? There it is. The thing jumps around when people ask questions. What is an appropriate salary, Mike wants to know, for COO?
So really, it depends. I got to be honest with you. I want COOs actually focused on net margin. I want them to help us be more profitable. I didn't hire a COO to grow the revenue line. I hired a COO to help me keep better process and not improve the leaky bucket, hammer the CFO, work on the details. So our COOs are incentivized at the bottom. So for me, I want to put a comp plan together that allows the net margin to increase. So as we increase net margin, so goes their revenue. Their baseline, I think it depends where you are. One of our companies, I can think off top of hand, he makes 75 as his base and gets that 1% at the bottom, and he'll probably make 200 grand this year. Our other company, he gets about a 95,000 base. By the way, please be respectful. We're having an internal discussion. I don't really want to see these things posted. You want to get off my friend list, be a douchebag. And so And then their comp was a little lower because I took more risk. So
I love it.
It depends.
Love it, love it. Okay, let's see. Jack Gordon, I have 5 companies. One is almost 7 figures. One is about to launch. The others are all 5 right now. The big one carries most of the expenses, including employees. What should I be thinking about to transition to a fairer system of load distribution and better economy of scale in accounting?
Oof. Let me break down that question again.
So
I
basically,
see it. I'm looking at it.
Okay, good.
So
I think it's really just how do you do shared services, right?
I was going to say, I'm a big fan of kind of a shared back office, right? There are certain categories. By the way, wrote about it. You got a little playbook. I believe there are certain categories that can't be shared. I believe that the heartbeat, the closer to the central nervous system, I believe that it's going to be very hard to ever fractionalize your COO. I think it's generally extremely hard to fractionalize anything at the core. But if you start getting outside of that core, the beauty of our global world is this idea of fractionalization. And one place that's better than ever is as your operations start to expand, that you can look at winning back cost, is to create a basically centralized back office where HR all runs in one place. Accounting is resource allocated based on the resources you have. Benefit administration, deferred allocation of retirement benefits, all those back office events you can share across your sister companies. And what I would do is look to improve that. And I would put that in the right vehicle where I can improve that, like a management company that, probably looks like a C Corp that has, fancy IRS term called a 1244B election, so that you can do all these great things, maximize the expense. That thing's not designed to make money. It's designed to help you lose less.
Love it. All right. Nelson has a question. Are there any good guidelines or checklists to build business credit to maximize loan amounts? And do you recommend any particular lenders for loans that focus on the business and not on the owners?
I saw a presentation that Roland had done with Ty Crandall's stuff. He had some things in there that I thought was really very helpful on some credit things. I think you could go to a thing called the Google and get a pretty good list on that. But I thought Ty's stuff was pretty solid, to be honest with you.
Yeah, and Ty, Deanna, we have a call with Ty coming up, don't we? When is that?
We do. Hold on. I believe it is, it's Thursday at 5 p.m. Central, so 3 p.m. Pacific.
And I really want to say something. Right now, credit is an interesting thing. So terms are tightening. The bigger the bank, the tighter the terms. And so I want to help you all with one. I'm going to get a little accounting-y, but remember, from a non-accountant, okay? Your balance sheet is starting to matter more every day. What is a balance sheet? It's the things that recognizes your assets and your liabilities. So your profit and loss is your cash flow statement, your income statement. But your balance sheet matters a lot when you're going to a bank. The smaller you are, the more you have to rely on things like a personal guarantee against your asset load. But a jacked up balance sheet is even worse than not having one. Credit terms are getting really tight quietly. And what I would recommend you do is make sure that someone on your team, including yourself, you're cleaning up your balance sheet. We had a big client just the other day who kind of blows off their balance sheets, a new client, so we're helping them fix this, who lost most of their Bank of America underwriting because their balance sheet didn't line up with what story they were telling. And it freaked out the underwriters, and they collapsed their line of credit. Now, good news is I think we're going to be able to move them somewhere else and kind of put a little resuscitation. But they did one super dumb thing. By the way, you wouldn't think this is dumb. They paid their credit card faster than the normal terms. Now you say to yourself, why would that strike a credit risk? Because banks look at that and say, wait a minute, are you paying faster because something bad's about to happen? Weird times happen when credit tightens. Same reason why you don't want to be late on a credit card bill. Be careful if you start changing the ordinary course of how your credit terms are happening with your bank. And so this is a place where the smaller you are, the more you might have to look like credit terms that look like guarantees. And corporate credit helps with this process. It helps you get to the point when your balance sheet gets healthier, where you won't have to lean on personal guarantees. I don't do any deals anymore because of my size with any personal guarantees. Now, there's a reason why. I literally almost cooked down the Fisher Empire. And I can tell you that whole story, but I promised Deb and the kids I'd never do that to her again. So I try to structure all my deals without personal guarantees, but I also have the net worth and the structure to do that. That's not going to always be true depending on where you are in your journey cycle.
Love it. All right, let's see. Kyle says, just starting out, want to start a consulting companies in marketing with possibilities of gaining equity. What type of entity would you use for a solo consulting company with the goals of acquiring agencies?
Yeah, I mean, I probably ask one or two more questions. Do I plan to bring on partners into that consultancy? Do I plan on this being my little thing? I never change it. It's going to be me. That would change whether I would be an S Corp or an LLC. Because if it's just me and I never plan on partnering with anybody, I like the benefits that come along with an S Corp. There's more benefits because the tax lawyer in me can't help but not pay certain taxes, especially if there's going to be an employment relationship inside this entity. If I plan to have partners, well, then the S Corp's a problem. Then I might own my own S Corp, owning my interest, in a consultancy. I was going to say something. I'm going to leave that for another day about Roland and I, but like you would have an entity for a consultancy.
You can't say that and just leave it hanging. I mean, now I want to know.
Well, it's something you and I talk offline about. I don't think we're ready to tell anybody about it.
All right. Yev says, fully accountable for business and legal due diligence or just business due diligence? Also finalizing asset purchase agreement or no?
So I would lean on Grant and his team for the legal due diligence. That's his category. Here's what happens. If you're a full service client of ours, you get what happens in a high level good accounting office is that there's a line that gets danced about looking at those things. And my COO and myself are both lawyers. So with the nature of our environment, we dance a little, but we will not act as your lawyer. So when it comes to the legal pieces you need to have an engaged lawyer to do that. In our world, the reason why I would see you ask that question is good accountants actually dance over that line on a regular basis in what parts of the advice they give. But that always needs with complexity to go back to the deal lawyer.
Yeah, there's a lot of crossover. So that you really want both, Yev, on those deals if if the deal merits it. Let's see. And then finalizing the asset purchase agreement, you definitely want both because there's going to be working capital and ownership percentage calculations and all kinds of stuff that is going to, there's going to be a bucket, the basket holdback, all of those things are going to be things that the accountants, the working capital adjustment, all those are things they're going to hop into.
Yeah,
but
and then I would also add that most deal lawyers, but actually probably most lawyers, and I would look for a deal attorney before I would just look for any attorney. Like Grant is kind of a special creature, and he's only going to have so much room to work with the ones that are worth working for. I'm not trying to be beating on Grant, but most counsel don't have a good complexity as it comes to tax. And so what Roland's talking about is that left and right hand belong together.
Yeah, or business. I mean, it's like accounting is basically considered generally the highest level business degree that you can get as far as it's the hardest, and then under that is finance. And then somewhere way, 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 way down, there's like communications and marketing. No, I'm just kidding. I
learned my acumen as a businessman in deal flow. I didn't get that out of law school.
Yeah. Well, that's what I was going to say is I think you guys have heard me say a few times that like, I don't remember what Grant's, he might be economics undergrad. I don't remember, but most attorneys, like when you go and you talk to your counselor at law school, pre-law, getting ready to do it, they're like major in political science or English because law is about writing and government. And that's what most attorneys have a background in. So, having business people is really critical on top of the law, but also having people that are deal attorneys, because they're very specific things that I don't know and Vinnie doesn't know about the law of litigating deals. And because Grant is also a litigator, he goes in and fights. And so he's very aware of the points where things fall apart. And that to me is always the best kind of attorney to have. Is the two attorneys that I rely on for transactions are both litigators first and then went into the deal side.
And the reason why that's important, you may not, we use the word practitioner. Think doctor, engineer, lawyer, accountant. You want someone who's actively practicing, because like the fidelity of a lawyer, like I understand most of those things. And when I had a high level practice, I was reading things like jurisprudence and the precedent of law. And so litigators are always researching case law because they're needing to in order to successfully argue the point of the contractual adjustment for which they're dealing with. And so they always have every story you can think of. Now, some of them are like, this is where you got to have deal flow because they're missing pieces of that. But you want a practitioner, right? The reason why you wouldn't hire me as your lawyer is one, because you can't. But two, I would not be actively practicing, paying attention to the finer nuances that keep moving along in the precedent and jurisprudence of the law.
Exactly. Kathy said that she would love to explore being your deal flow partner. So she's right there. She's 2 under you on mine, so she's waving. And
actually 1 over on mine. It's like the Brady Bunch meets
it is. I know.
Pyramid meets the Hollywood Squares on my thing. All right. So yeah, hit me up. You know how to get me. Cool.
She also says she's partnered with a 30-year plus buy-side M&A veteran and knows that we can grow this big. So there you go.
Definitely hit me up. I like that even more.
Yeah.
Good. Hey, I saw a question on here I thought was pretty good. Patch doesn't usually ask good questions, but when he does, we should reward him. This is a good question. So Patch, just playing with you, buddy. You're a friend. You can take it. I've done far worse to Patch, but that's good.
So, what he's doing right now is calculating the revenge. See that?
Yeah, he is. Patch is asking, like, if I wanted to do a deal flow and use my IRA or 401k, like your deferred benefits, how do you do that? Well, you need to get that moved into a self-directed IRA. There are companies that are good at that. One of my good friends is a guy named Greg Herline, who owns his own version of Horizon Trust, but there are other ones where I would have moved early on. I remember moving my 401k out of our company plan, moved it over to our self-directed, and I bought a building with it, right? And, it's actually a category you can do. I just decided this was back in the last correction. I wanted to do something else with my money and not just have it in the passive equities market. But in order to get that done and have that flow, you need to first convert it out of whatever you're in into something that allows you to be a director of it, which is self-direction, right?
Related is you can do that with only from previous IRAs or 401ks or new ones, or what's the difference between IRAs and 401ks for that, if any, et cetera, et cetera?
Yeah, so now you're tapping into my old ERISA employment lawyer days, but here's what I would tell you. So the rules change a little bit on that, but if you have an active 401k plan and you're contributing to that, I would tell you that plan document probably has restrictions of you being able to move it out of there while you're active. You would have to actually go through a termination of employee to move it type thing. So active plans either have to close or there has to be an event that you're removed out of it, or your 401k active plan is probably not going to be a place you're going to be able to convert to a self-directed. But if you're already in the IRA environment, removing it from a simple to a self-directed, those are just hoops to jump through. So those are the bigger nuances.
Yeah, and there are other things to think about there. There are possibilities of loans. There's a program called ROBS, the Rollover Business Startup, which is one of the things on our list of now 200, by the way, ways to acquire businesses, which we're going to talk about a little bit when we come up on the next meeting.
Then Midland Trust, good one. I know the guys at Equity Trust. I think they're actually here from Cleveland. They're good guys. Yep. I was going to say also, call your 401k person. They actually make money in both directions, whether you borrow from it, not borrow from it. Like they'll tell you the things you can do, whether it's your IRA or your 401k. They're incentivized to have you put debt against yourself. They get money both times.
Yeah, and good advice in the chat from several people, from Jasuk and Sunny and Kathy. The one of the issues that you guys want to be concerned about is UBI, unrelated business income, because there's different taxes that apply to that. So just talk to whoever is your plan person on that, because there are going to be peculiarities based on your provider, your contract, and other things that you'll want to talk about. But there are several ways.
I couldn't take my current 401k because of me and a couple of lopsided employees on excess compensation in my roll around plan. I would actually destroy the plan if I made a dumb move. Now there's safe harbor provisions, and I got someone on my team who wouldn't let us do that, but just, you got to ask the questions. You don't want to crater it and then have to go back and try to deal with your friends at the IRS.
Yeah, there are several ways to use the patch your IRAs and 401ks and retirement plans to pay for businesses. There's lots of things you can do with options too, as far as tax planning. We've done deals where we will acquire a company, we'll acquire an option to acquire a company, and then the option ends up becoming incredibly valuable, and all of the taxes go into the non-taxed IRA because it's an option as opposed to the actual company itself bought at the price. So the option ends up having all the value. There's a lot of really creative, cool things that you can do there. But what I might do is get our tax attorney on the call, one of these calls. Tax attorney is my dad, so it's always fun to have him on.
He's a badass. He knows so much about this. You just better strap on your learning ears.
Yeah, definitely. Patch, yeah, pull. Let's unmutify you here. There you go. What you got?
So I actually opened a can of worms, so I'm glad you guys are expanding upon it. I made a comment on Facebook that I don't take cash out of my pocket. If I have to go to a deal, I don't take it out of my checking account or my savings account. I usually move it from my 401k or my IRA, but it seems like not a whole lot of people know about that. So
do you have your speaker on at the same time? There's some doubling going on with your talking there.
Or you just been drinking a lot today, Pat?
I don't know. Is that better?
Let's try it again.
How about this? Is that any better?
I think it's whatever your mic system is.
Yeah, just a little echo in there. But go ahead. It's not too hard to understand.
I think he's done. I think he's just making the point that that's a category.
Is that any better?
Yeah.
Okay. Yeah. So I basically just mentioned that I don't take money out of my pocket. I only take money out of my 401k or IRA, but I don't think a lot of people know how that even works. So Vinnie, if you want to explain just how that works, because I think people
Let's do this. What I'll do is I'll get Jim Dew on. I think Jim would be a good guy to talk about that because he's super, super creative. So Deanna, will you arrange an elite call with Jim, and then we'll do a whole thing on that.
It's just a retirement account, everybody, whether it's 401k or not. These are just ways to pre and post tax money opportunities to put deferral into your income, and you save dollars. You can borrow against that. There are ramifications of interest rates. If you do it wrong, there's acceleration of tax. You can do it. It's a great vehicle. Totally have at it. Almost all franchises use some version of borrowing against a 401k or IRA in order to actually have their little ice cream hut.
Love it. Okay, let's hop to Kyle. Kyle says, I feel like I've learned more in finances since joining Epic than I have in the past 38 years combined. That's awesome. That's great. There is a lot of that here. So you're indirectly getting kind of a advanced MBA in a few different things. Let's see. How do you feel about over cash valued whole life policies?
I love them, but just understand what they are. So I have 3 of them. Now, I use one of them for deal flow. I use one of them for straight up just bank account creditor protection. And the third one is just death benefit that I started early that I probably wouldn't have the third one. But the 2 for sure I would have. There are better things to get rates of return on your money. It's a hedge. It's a protection. It's like a savings account with a little bit more benefit. Now, in the state of Ohio, all of that's full creditor protected. So I just kind of like that. The asset protection in me likes diversifying my buckets. but I used that cash on one of them. We're about to go close on an apartment complex, and some of the money I'm going to use is coming out of there.
Awesome. Okay, let's see. Okay, anybody else have any questions for Vinnie? If not, we're gonna let him go and foot some numbers.
Well, I would say this. We're going to give you, let me see if they did it for me yet. We're going to give you a sheet, and I will have that to you today, Deanna. Oh, looks like I got it. Okay, it's coming. Deanna, that will be something you can give to the group. This is kind of like what I would do to look at a deal and how I go and look at them. Right now, listen, I need to give you one bit of advice. I think there are deals out there. I also think some of those deals, businesses have gotten potentially crushed under two categories. One, it's exposed how a large chunk of their revenue is on a couple clients, and losing one of them has significantly impacted their revenue. So I normally would start with net profit, but right now, during credit tightening times, I want to see cycle of revenue. I would normally be a few down on that, but right now, if there's a downtick in revenue, my analysis changes because I want to know what's up in the business. What used to be an EBITDA buy on 2019 is way different because the marketplace has changed. So I just want to throw that out there, that when corrections happen, you might want to reorder what you look at first. And one of them to me is revenue disruptions in times like this. You hear things like, if you have a down year, you might have a down 90 days. Now that down 90 days might entirely change what happened in the last 3 years. Now, maybe that's a strategic buy that you can get for cheaper, and you know you're potentially paying a certain number, but to me, it's very scary to look at buy on historicals if there's been a massive disruption to revenue because of this external disruption in the marketplace. So just wanted to throw that in there.
Okay, last one for the day is from Erwin, which is, what do I need to look for to find a great accountant?
The motto of our company is time, money, and resources. How much time do you want to spend doing something you don't know how to do? How much money do you want to spend fixing something that's causing you a lot of money that you're not paying attention to? And do you have the resources to pay on it? To me, if you run that matrix through your head, that's what caused me to build my own company, to solve my own problem.
What were you looking for though, Vinnie? Like what are the things that are important to you? If let's just say that now, knowing everything that you know, running the company that you run, you are doing a deal. What would you want the accountant, like how would you interview them? What would the questions or qualifications you would want them to have be? How would you go about finding them? Obviously, it's easy because everybody here can talk directly to you, but I think like Erwin's overseas, and so he's kind of, okay, where do I get an accountant that's going to be operating this company?
So Canada, that's North America. That'd be something, whoever wrote that, we can talk to you about that. But here's how I talk to accountants. It's just same way I talk to my company or planning meetings. I have creative show me how to support the deal and talk me out of it. Those are two different types of meetings. So when I'm talking to an accountant, here's the things I will not hire or work with this type of accountant. If this person says to me, ooh, you might get audited, they're immediately off the team. I don't care about whether I get audited. I care about whether I could win the audit.
Right.
It's a flag to know what type of person I'm dealing with. But two, I want someone who's not going to take my strong personality and just lay down. I want them to talk me out of a deal, or at least point to the landmines that are in the deal that they see I don't see. And then the third meeting is the creative one. Show me why I should do this deal. Those are three separate events. Now, the first one is just to make sure you know which one to fire. If you've got a form-filling accountant that's all about, hey, man, I guess you have to evaluate your own risk. Are you somebody that doesn't want to be legally aggressive? Well, then maybe that's you, not them. But for me, I believe in the theory of pay Caesar only what he's due, but not a penny more. And maybe a penny or two less if possible. So that's just the theory I subscribe to. So I'm always going to be very proactive in reducing every dollar of tax. I need that kind of person around me. That's not true of everybody. If you don't want to be that type of person, then get that type of person around you. Now, your filing for taxation is different than deal flow. I've learned that the operation of a business is not the same as Deb and I paying less in tax. That's the other part I would be looking at. We think about how do you flow and run the business. The 1040 is the thing you do at the end.
I love it. Awesome. Well, Vinnie, thank you so much for coming here and hanging out with us today, sharing your time and brilliance. Deanna, thank you as always. Always love having you here. And I love your new venues that you're moving around in your house. And everybody, thank you for your contributions and also for being here. And let's see the deals, man. It's time to get some deals happening. So if you don't and you need help, let us know. Let your coaches know. Talk to Adam and Chris. But it's deal time. Let's get rocking and rolling. Talk to you guys later. Have a wonderful day, and I'll see a lot of you very soon.